So, what's the best strategy to pass a funded challenge? Now, I get this question quite a bit. Often it's from people who are considering using my trade copier service, and they're trying to figure out what strategy I use. I've been trading for 22 years, and there are specific strategies that I've learned. Many of them I no longer use. For example, I don't use the Fibonacci tool. I don't use a whole lot of indicators. I used to use the CCI. I used to use stochastics. I used to use the MACD. You might see on some of my old videos that I was using indicators to help me confirm things like breakouts, pullbacks, and then a test of the breakout. So sometimes when a trend is in an established trend, that's sometimes a better opportunity. So you also have to take into consideration what it is that you're trading. Like what time frame, what are your goals? Like are you going to be sitting in front of the computer for, 5, 6, 7 hours? Are you going to be day trading it or are you going to be swing trading? Things like that all have some kind of impact on what you decide your trading strategy or methodology should be all about. And I had to go through that process over the course of 22 years. Life changes, my family grew and things changed at different times in my life. So there were, certain times that I could spend more time right in front of the computer and trade and day trade like every minute, every hour. And then other times I had to slow things down. So you have to take that into consideration. Things might change. One of the strategies that I find the most reliable and the most consistent is trading in a trending environment. Now, a lot of people will talk about that, but they don't necessarily explain what it is because, it's kind of hard to pinpoint. And sometimes when you watch some of these videos on YouTube or wherever, Facebook or in a particular group or on a webinar, they'll sort of cherry pick their trade opportunities. Now, I'm pretty much doing the same thing here. I want to be totally open with you and show you that I'm going to show you a particular strategy and an entry. It's a technique that you can apply, but keep in mind you're going to have to do some testing if you're going to do this on your own, and you have to be aware of the conditions. So you're going to notice here in this move, there's somewhat of an established trend going on here. This is a 5-minute chart of the US 30. Now, I like trading the US 30 because it is a relatively big mover. I mean, compared to, let's say, Forex, I get some good opportunities in Forex, but US 30 can really provide some great opportunities to make a lot of money. So this is very, very different. The conditions right here are very different than what you see over here. You have to be able to distinguish the difference and the characteristics. I'll give you a tip. So one of the things that really, really helped me in the beginning of my trading career was to understand the concepts of accumulation and distribution. I'll leave it there because I'm not going to turn this into like a big, trading strategy or lesson and things like that and go deep. It would take an hour or two to talk about these subjects because there are different shapes and variety of different phases in each one of these levels of accumulation and distribution. Accumulation would be, for example, an area of consolidation at the lows, and then distribution would be an area of consolidation at the highs. Now, there are specific reasons why the market behaves in that manner. Where you see it just accumulating, you would see and think of it in terms of smart money acquiring whatever stock, whatever it is that you're looking at and you're trading at the lows, and they're going to do it in a very specific way, which thereby causes the shapes and the patterns that you see down there at that low of consolidation. So I'll leave it there. It's a good idea for you to take the time and study that. Took me quite a while to learn these techniques, but there are specific schematics that I use on a regular basis to determine that. So this is an area of basically consolidation. So I really don't have a trending environment in here. One of the things that I look for and that I teach my coaching clients is that in order to, it's just a basic rule of thumb. I mean, it's one simple way of determining if you're looking at an uptrend, and it's to draw a 45-degree line on your chart. It's probably one of the easiest things to do. The other thing that you can do is add a 20-day EMA on your chart. And you'll notice by the angle of the 20-day EMA that it's in an uptrend or in a downtrend, and it's about a 45-degree angle. Now, there is one little tip that I'll share with you here with TradingView. So if you go over here to the trend line indicator. So I'm clicking on that, and you'll notice that I'm just going to click once on the screen, and I'm going to hold down the shift button. Now, when I do that, you'll notice that this indicator right here, what it's doing, it's only letting me move it in a almost like a clock. You'll see that 45-degree angle right there. I'm holding the shift button down and my right mouse button down on this trend line. And this is, I can't draw it in between these two spots. So here's a 45-degree line. And if I just leave it alone with that shift button and tap one more time, there's my 45-degree angle. So I could move that down here and I just kind of use it as a point of reference. It doesn't have to be precisely a 45-degree angle. You can see this one's pretty steep. There are other trending moves where it's a little flatter. It's a little more closer in terms of resembling this 45-degree angle. But that's pretty good. Or you could use the 20-day EMA. That would suffice. Like that would work. Now, the next thing that you do, and this is one of the things that I think about when I'm looking for this trending move and I'm looking for an entry. So you'll notice that, let's say if for whatever reason you're not too sure about this reversal pattern right here, sometimes the reversals are too quick, right? It doesn't really give you an opportunity to study the entire breakdown of this reversal. They happen quickly. Other times they take a little while to form, and those are obviously more reliable. And I also watch volume. Volume is pretty much the only indicator that I'll use. Now, I do use point and figure to calculate my take profit targets, and it's extremely accurate as far as giving me an entry and telling me exactly where I need to get out of the trade. However, again, I'm not going to turn this video into a lesson all about point and figure. I'll do that in another video. It'll be brief because point and figure can be pretty elaborate for those who haven't really spent any time learning that tool. So again, 20-day moving average, 45-degree angle on that 20-day moving average or the line itself. You want to just kind of give it a quick look, a comparison. Is this in an uptrend? There's your 45. So think of it in terms of 45 and 45. So I'm looking at a 45-degree angle on the uptrend or the downtrend, and then I'm looking for a specific bar. So I'm going to open this up right here, and you'll see this arrow right here pointing to this bar right here. You'll notice that it's a bearish bar in an uptrend and there's a pullback, but there's also a wick attached to that bar right there. You can see where it closed about in the middle. So what this means is I'm looking for a bar that closes 45%, at least 45. Keep in mind, at least 45% off the highs in an uptrend. And then just the opposite, it would be 45% off the lows in a downtrend. So here in this example, it's in an uptrend. I have my 45-degree slope right here, just giving me a point of reference. It's a strong uptrend. Now I'm going to be looking for an entry to re-enter if I haven't got into this trade at this point down here at the lows. And again, a lot of times people will wait or they'll hesitate. They want a little more confirmation in the move. So this is a great way to do that. You're going to notice this pullback right here. And these wicks, think of those wicks for the most part. If the trend's going to continue, it's almost designed, that particular candle, to cause you to pause and to hesitate and think to yourself, if this is all we see, everything to the left and that bar, you're thinking, uh-oh, maybe it's reached resistance, it's over, it looked like it moved up and then it pulled back down and you started to see more selling. That is what confuses most inexperienced traders when they're not familiar with this particular type of behavior. This is basically a pullback. And you'll notice that what's happening here is that it stops at the low, the next one opens up, and just by simply watching, this one takes off. Now, not all of them, of course, are going to do that. So again, you want to practice with this method. So we're using a 45-degree angle. So that's the first thing, 45 and 45. 45-degree angle and a candle that closes at least 45% from the highs of that bar in an uptrend. It could be 50%, it could be 60%, 70%, that's great, but at least 45% off the highs on that pullback. That's perfect. Now, what I do at this point is once I have that signal right there confirmed, let me open this up just a little bit more because I'm going to put this other tool in here. So I'm going to get in about 15 to 20 points above that high on US 30. You can use this strategy with anything. I use it on Forex. So I'm going to go over here to the entry tool. I'm going to go long, a long position right here. So you'll notice this bar right here. I'm going to give you the high. The high right there is 37.15. So I'm going to go, let me move it around a little bit. 715. We're going to go to 725. Moving it over there on the right hand. There we go. That's 725. So that's about 10 points above. So 10, 15, maybe 20 points above. I'm going to leave it right there, 10 points above. And then I'm going to use the stop. Now, here's what I get a big question with on this particular setup. If you're using your 20-day moving average, sometimes it'll hug this move right here, and sometimes on a pullback, you'll get a little more room. If I get a little more room on a pullback and the 20-day moving average is sitting down here, I'm going to drag the stop loss right around where that 20-day moving average is. But I don't want it to exceed 150, 130 points. It's very common that I can get into a trade on US 30 on a 5-minute chart and I can use about 60, 80, maybe 90 point stop loss. And that's pretty good because I've factored in that I can only take so many losses at using a stop loss like that in one particular day to stay away from the maximum drawdown that most of the funding companies require. So that is something that you need to pay attention to. You need to do some math if you're going to use this as a stop loss and figure out exactly based on the lot size you're using, the exposure that when you get into these trades, what would be too large a stop loss for you to use. You want to take that into consideration. And I usually get about 2 trades sometimes. It could be a little more active, maybe 4 times in one day on US 30, but generally it's going to be about 1, maybe 2 trades a day. So if I had 2 losses with a 120 point stop loss, I'm losing about 240 points for the whole day. And I don't want that to go anywhere near 3%. So just factor that in. That's my personal approach. And then that tells me exactly what lot size I need to use. So in this case, if I'm using a 100 point stop loss, I'd like to get 2 for 1. So I'm going to be thinking, 200 is my target up here. And some people will go like 1.5 times risk, things like that. I mean, everybody's got a different idea. What I really like doing, in addition to setting this up and trying to see exactly what would be double my risk, is to calculate specific levels of support and resistance. That's a lot more accurate. And as I mentioned, I no longer use the Fibonacci tool. I used to use it in the first couple of years of my trading career, but it's not as reliable as point and figure is, and it's not as reliable as me trading to key levels of support and resistance that I can find on the larger time frames. So be aware of that. It is going to take some practice if you're going to use this, but I'm just giving you the entry and the idea and the concept. This is not the entire trading strategy. You want to practice this and you want to understand these concepts, like trading it to the next level of support and resistance that is a major level of support and resistance. You got to be careful with that. So in this case, you can see that it worked perfectly, and there was actually a second trade right here. So now I'm going to get rid of this indicator right here, this trade indicator, and you can see the second entry. So in this case, the first example, it was a bearish move with the 45% close off the high at least. This one was a bullish move with 45% off the high. So it worked just the same. Again, I would get in 10, 15, maybe 20 points, whatever you're comfortable with, practice with it above that high, putting my stop below the low or the price swing low or where the moving average is. And then, and I don't want it to exceed 150 points. If it's more than 150 points that the stop loss I have to use, I would probably pass on that trade and leave it alone. Again, it doesn't necessarily mean that the trade won't work. It's just that you have to stick to some kind of money management plan to keep you in this game and prevent you from blowing up your trading account. So this one worked just the same. It took a little while longer, but it did pick up right there. And then we experienced a pullback, and then it probably hit, the target again. You can do it again, but at some point expect that, if this is the second or the third signal in an uptrend, at some point they're not going to work. If I saw a third move like this with a signal closer to resistance, I would not take it because there's just not enough room based on my stop and my target. It's going to start shortening the distance, and I have to respect the resistance level that it might run into. That is the other reason why you have to pay close attention to support and resistance on the larger time frames. You'll find them on the 4-hour chart, you'll find them on the daily chart, and you'll find them on the 1-hour chart as well. I'm looking at the daily, the 4-hour, the 1-hour, and the 5-minute when I'm getting into these trades like this when I'm day trading. So that's my trading strategy. It's very effective. It's just one way of getting in an uptrend or a downtrend. It's not necessarily a breakout. That's a different strategy. I can make a video on that. And I do have strategies and methods so that I can trade occasionally inside of consolidation, but I don't do it that often. Very often I'll just sit and wait for a good clean breakout. And again, back to what I said in the beginning, Accumulation and distribution is an amazing concept if you understand it. There's a lot of power and a lot of potential in identifying these areas of consolidation and trading with the smart money. I know a lot of people throw that phrase around, and a lot of them really don't understand what they're talking about. They don't understand the mechanics behind it. They'll say, oh, we trade with the banks. Okay, well, you probably don't. A lot of people would like to say that, but there's a lot more to it than just that. And those of you who have read, for example, Mark Douglas's book, Trading in the Zone, or The Disciplined Trader, you know what I'm talking about. There's a lot more to it than just simply saying we trade with the banks or we trade with the smart money. You know, those people probably have a really limited understanding of who's trading at what time, what's causing all of this activity, and can you really trade and find yourself in a big explosive move that trends for the day, where you could sit back and look at it and say, this is probably a smart money trade. Smart money operators, the composite operator. If you study Wyckoff, you'll know exactly what I'm talking about. So that's my strategy. This is one of the methods that I use when I'm day trading. Thank you for watching. Again, if you want to use my trade copier, you don't even have to worry about doing this. It's probably a good idea that you know a little, you get a little background on what my trading strategy and methodologies are, but I can actually do it for you. You can copy all of my trades. You can use all of my trades that you copy to pass your evaluation phases with a funding company. And then once you pass the evaluation, you can continue to use my trade copier. And every time I execute a trade like this, you'll get the same results. The trade copier is instant. It's easy to connect. It's the easiest thing. I mean, I can't believe the opportunity that I'm seeing in this business nowadays with all of these funding companies making it so easy for people to come along. I mean, no longer do you have to worry about saving up $10,000, $20,000, $50,000 to make a difference so that you can start taking care of your family the way you wanted to or quitting your job. Now you have access to capital, 100, 250,000, 500,000, even $1 million funding account with Surge Trader. It's one of my favorite companies. I have multiple accounts with many of them, but that is one of my favorite. You know, when you start doing things like this and you're consistent, or if you're using my trade copier, you can attach it to that account, pass the evaluation, and now you're making profits every single month based on these big capital accounts. Like, I mean, getting access to a capital of 100,000, 250,000, that wasn't possible 10, 15, 20 years ago when I started in this business. Everybody had to save up their own money or, you know, get a friend or a family or somebody to invest. And then if they blew up the money and lost it, you know, they were kind of reliable. Here with these funding companies, if you lose, you're not liable. Like, you don't have to pay that back. They're willing to take the risk. And if you have a $500, $1 million trading account with, let's say, Surge Trader, you could potentially see $50,000, $100,000 or more per month going. You could send that home. I mean, that's money that goes right into your bank account. You can use my trade copier. I'll be doing all the trading for you. Thanks for watching.